हेलो माय व्यूअर्स। पिछले वीडियो में जो पढ़ाया था मैंने उससे आज आगे का पढ़ाई करेंगे हम लोग। ये हमारा है ट्रेडिशनल मेथड, रूल्स ऑफ डेबिट एंड क्रेडिट द अकाउंट्स। इसमें फर्स्ट आपके 3 खाते मैंने बताए थे। ट्रेडिशनल मेथड में 3 होते हैं, पर्सनल, रियल। इसको मैंने एम मेथड यानी मॉडर्न अप्रोच मेथड से इसको लिंकअप किया है। रियल या फिर इसको प्रॉपर्टी एसेट्स भी अकाउंट्स बोल सकते हैं। नेक्स्ट है आपका नॉमिनल अकाउंट, जिसमें एक्सपेंसेस और लॉसेस एंड रेवेन्यू एंड गेन आते हैं। तो इसमें हम पढ़ेंगे, फर्स्ट है पर्सनल अकाउंट। पर्सनल अकाउंट में हमारा है डेबिट करेंगे उन्हीं को जो रिसीव, हमें अगर बिजनेस से कुछ, द अकाउंट ऑफ ए पर्सन हु रिसीव सम बेनिफिट्स फ्रॉम द बिजनेस शुड बी डेबिटेड। इट्स मीन दैट वन पर्सन ए रिसीव एनी benefit by starting the business. If he get any benefit from the business which he started, it should be debited. Debit the receiver. The person who get benefits from the business means if he get a profit from that business, it should be debited the receiver. The person name should be debited here. Receiver, who is the getting the profit from the benefits from the business? The person who start the business. The owner of the business, they get the benefit for the business, and that is the receiver. Credit, the account of the person who gives some benefit to the business. He is the receiving the person. He is the person who is giving benefit to the business. The person who give the benefits or some kind of monetary helps, it should be credited, and the giver is the creditor and the receiver of the business is the debited. Okay. Next is property or real account assets. Real property or real account. In this account also we have the assets. Sometime it will be increase and sometime it will be decrease. When assets increases in the business, when assets is coming to the business, when we purchase asset for the business, that it means the assets of the businesses increases, and increases the assets when entered in the business, it should be increased and it should be debited. When the same asset leaving the business, when that after using that assets, due to some any reason it leave the business, the asset is not useful for the business, then it should be credited. It should decrease the assets of the business. Okay. Next is the nominal account. Nominal account means expenses, loss and the gains. Here what are the expenses? What are the expenses and lot? It should be debited. The increase in the expenses, when expenses are increased, it means that your debited, your expenses are increased, and increase mean it is debited. Next, same thing, if the expenses are decreased, when the expenses are decreased, it means it should be decreased. Here is a sign of decrease minus, it means that it should be credited. Same thing, it's happened for the revenue also. Revenue means gain. If you get a gain from the business, any kind of profit or any type of gain from the business, it should be, if you revenue is continues going to be increased in future, and your continues always continue, and oftenly you are increasing your revenue, then it should be increased. Increased means it should be credited. Same thing, sometimes it may be a loss for the business due to many reasons it can be, so it should be decreased. And decrease in the revenue in the debited, it should be debited, and increase in the revenue means it should be the credited. Okay. Now student, I had earlier taught that the classification of accounts. In the T method there are three kinds of account, and in M method, modern accounting approach, there is 5 accounts. By linking that accounts, I had tried to explain both the method in one way. So in personal account, it is both the personal account means both the same are account here. Here is the assets or real account. Assets in which method it is applicable? The word assets is applicable in the modern method, whereas the real account method, the traditional method, we use the real account. Real account means it is the assets account. Assets accounts means it is the real account. Next is the nominal account. Nominal accounts means nominal accounts is in the T method, that is traditional method, whereas the revenue and expenses which is followed in the modern method. By nominal accounts I divided the two things, revenue and expenses. Okay, I try to explain you the what is. So this is the partner accounts. When the business is started by the partner, more than 2 person, that is partnership, and that account maintained by the partners is partners account. Debtors accounts I had already explained. Creditor, accrued, unaccrued, prepaid. Prepaid which we paid in the expenses in advance. Outstanding means which have not been paid. It is paid during that period or during that financial year. It should be paid, that it remains to be paid. Outstanding interest means interest we have to pay, it remains to be paid. Prepaid expenses means we paid the expenses in advance. Again the outstanding expenses which we have to paid remain to be paid. Prepaid interest, prepaid commission, the commission which we sometimes we give commission for purchasing sometime and sometimes selling also. Sale tax payables, tax which governments earn revenue from the tax which we have to pay. It is also a personal account. Reserves means some out of profits which is kept aside for as a reserve for the meeting the unexpected losses or unexpected uncertainty which we reserve, keep a certain amount fixed as a reserve. Capital reserves means from the capitalism, it means that reserve which is kept as a capitals to in future if we necessity to introduce a capital from that reserves, we have to introduce in the business as a capital. From that capital reserve we introduce in the business, that is the reserve. Reserve keep aside a fixed amount, that is the reserve. Security premium. Next is provision for bad and doubtful. It is also a reserve for bad and doubtful debts. When there is a doubt to recover the debts from the debtors, then there is a reserves are also made for that doubtful and bad and doubtful debt. Provision for income tax, that reserve for income tax. We have to pay when we are running a business, we have to pay tax for the earned income, that is the reserve from income. Provision for discount on creditor. When we pay the amount at a correct time, sometimes the creditor give discount to us, so that is the provision for discount. Drawings, when we use the amount or any kinds for personal use, that is the drawing. Loan, when we take the money from the outside the business, that is the loan. All funds, whatever the funds we have created, that's all come in the personal account. Next is our assets and reals accounts. What are the accounts, what are the items which come in the reals and assets account? First is cash, building, machinery. These are the fixed assets and which remain in the business for a long time. Furniture, investment, some money are invested by us as to earn some benefit from that, so we can invest in the business as a future requirement. Goodwills, the name and fame of the firm is that goodwill. Bank, partners, trademarks, some marks are maintained and that mark sometime we sell. If by the marks some want to purchase it, they have to pay, and that is the assets of our business. Copyrights, again, copyrights means I have authority to blame anybody not to use this copy without my permission. If anybody wants theory or any assumption like that, that written, it is in a written form. And if anybody use my, it is a written form or it is in the music or any kind of that, if anybody want to use it, you have to get permission from me, and then only he can use that, and for that he has to pay something. That is the copyright. I have the authority to, without my authority no outsider can use this, and that is the copyright. Bills, receivables, tools, bank deposits, prepaid expenses, accrued income, closing stock, provision for bad debts, materials accounts, and interest receivable accounts. All these are come in the, what is come in the real and assets account. Next is the your nominal account. In nominal accounts, both the revenue and the gain and expenses and losses come under this account. First is our sales. Whatever we sell, we get the revenue. We are selling with the purpose to gain some more amount than the cost price. That is the sale and that is the revenue. Okay. Purchase return, when we purchase some and when we return back to due to the any default or due to the any default found in that product, we will sometimes we purchase and return it. That is the purchase of subscription. Means it is the, you have already heard that in the YouTube also subscribes my channel. That is the subscription. Same things. They are the subscription received, interest received, commission received, discount received, dividend from the shares, rent received, allowance received, transfer fees, profit and loss, membership. If anybody want to become a member of any club or any society, then he have to pay a fixed amount to become a member of that organization or that committee. That is the member fees. Entrance fees. For entrance in the, sometime you heard that a fair was held in somewhere and you have to pay a fees for that to entrance the entrance. That is the entrance fees. Next is the your expenses and losses. What are the expenses of purchase? When we purchase, we have to, when we are purchasing something, what, that is the revenue or expenses? That is the expenses. We have to spend some money, then we have able to purchase something. Sales returns, when we sale and return back to us, then it is the sales return. Carriage inwards. Carriage inward is also a purchase return. Purchase return. Carriage outwards means carriage inwards means when we are purchasing the goods and the convenience, or when we use the vehicles or any kind of transport, that is the carriage inwards. And carriage outwards, when we are selling that same the things to the outsider, or when they sells the goods and the vehicles or any kind of conveyance we use, that is the carriage outward. Freights and carriage. Freights means that is cargo, that the aeroplane or any kind of railway we use to transport the goods, that is the carriage and freight. Commission accounts, discounts, traveling expenses, sale promotion. To promote the sale, we are using some expenses for advertising like that to increase our sale and to earn from that profit, to earn profit from that sale. That is the sale promotion. Entertainment expense, rent and tax, light powering. Insurance premium. When we get the insurance policy, we have to pay premium. You have heard that we have to pay premium quarterly, half-yearly or annually. That premium is also an expense for us. And then the salary and wages, bank expenses, miscellaneous expenses means these are the small expenses which we called as a miscellaneous expenses. That is a small amount of expenses which are not usually occurred daily uses. That is miscellaneous. Depreciation means due to the wear and tear of assets, the assets became day by day, its production or its value decreases. That is the depreciation. Profit and loss accounts. Interest on loan. When we get a loan, we have to pay interest on that loan. Printing and stationery accounts. All these are come in the expenses. All these are we have to pay for. If we want to all these things, then we have to pay. Then the pay amount is called expenses or losses, and we get the amount from these things. When we earn something money from these things, that is the revenue and gain account. Okay, my viewers, thank you very much. If you like my video, share it. Okay, thank you.